In recent weeks, one of the most aggressive short sellers in the world has struck again. The firm is Muddy Waters, famous for exposing overvalued companies and corporate issues. This time, they've released a detailed short report targeting SanDisk, a major player in the memory chip industry. But before we dive into why they're shorting SanDisk, let's first understand what Muddy Waters actually is and how short selling really works. Muddy Waters was founded by Carson Block. His story is quite interesting. At just 22 years old, he was kicked out of the futures market for rule violations. Instead of giving up, he moved into stocks and built a reputation as one of the most relentless short sellers on Wall Street. The name Muddy Waters comes from a Chinese phrase, fishing in muddy waters. In other words, they look for companies where the truth is murky and they try to expose it. Short selling is essentially the opposite of traditional investing. When you buy a stock, you're betting the price will go up. When you short a stock, you're betting it will go down. Here's a simple way to think about it. Imagine you borrow a new iPhone from a friend, sell it for $1,000. A month later, the price drops to $700. You buy it back for $700, return it to your friend, and pocket the $300 difference. That's the basic idea of short selling. In the stock market, short sellers borrow shares from a broker, sell them immediately, and hope the price falls so they can buy them back cheaper later. Muddy Waters doesn't just short randomly. They spend months digging through financial reports, looking for accounting issues, inflated valuations, or hidden risks. When they find a target, they release detailed reports to the public. So why did Muddy Waters choose to short SanDisk? Their report basically boils down to three main points. First, they argue that the memory chip industry is highly cyclical. It's a classic boom and bust business. Right now, we're in a temporary shortage driven by AI demand, but Muddy Waters believes massive new capacity is coming online soon, which could lead to oversupply and falling prices. Second, they claim SanDisk lacks a strong competitive moat. Unlike NVIDIA with its software ecosystem and technological lead, memory chips are relatively standardized. Competitors like Samsung can quickly catch up or even undercut on price. Third, and perhaps most damaging, they point out that major insiders, including SanDisk's former parent Western Digital, have been aggressively selling shares at a discount. This sends a worrying signal to the market. The report caused an immediate reaction. SanDisk's stock dropped sharply on the day it was released. But here's the bigger picture. This short attack isn't just about one company. It's a warning shot about the entire AI narrative. For the past year, the market has been pricing in endless AI growth, pushing up anything even remotely connected to artificial intelligence. Muddy Waters is essentially saying, slow down. Memory chips are still a commodity business. They follow the classic supply-demand cycle. The current shortage may not last. This is an important reminder for all of us. When everyone is chasing the same hot story, it's easy to forget basic economic laws. Cycles still exist. Supply eventually catches up with demand. Prices that rise too fast often come back down just as hard. As regular investors, what should we take away from this? First, understand the food chain in the market. There are sheep, wolves, and vultures. As retail investors, we need to be aware of who we're dealing with. Second, when everyone is rushing into a narrative, stay grounded in fundamentals. Hype can last longer than you expect, but gravity eventually wins. Third, the market doesn't care about fairness. It only cares about information, capital, and incentives. The rise of short sellers like Muddy Waters actually shows that the market has matured to a certain level. They act as a check on overvaluation and fraud, even if their methods can be aggressive. At the end of the day, whether you agree with their report on SanDisk or not, one thing is clear. In the world of AI and high-growth tech, not everything is going to be a straight line upward. Cycles still matter. If you enjoyed this breakdown, please give the video a thumbs up and subscribe for more honest takes on markets and investing. I'll see you in the next one.